You're welcome back to Business Morning on Channels Television. Well, at the AFEX commodities market in the week ended 31st of May 2021, it was a very active one. Deals, commodities index, as well as exchange index were all in the positive. We have Michael Martins, portfolio manager at AFEX, to give us details. Hello, Michael. Good morning. It's another week.
Hi, Ini. Good morning. Thank you for having me once again.
Yeah. So bring us up to speed about activities. It was a very active week in the market.
Yes, it was. So if you look at the table in front of you, the total value of transactions traded on the exchange went up in the week under consideration by a factor of 149, from around 0.01 billion naira to close the trading week at 1.005 billion naira. The total number of contracts traded on the exchange also went up by a factor of 119, from around 537 contracts to close the trading week at just over 64,000 contracts. The total number of deals that happened on the exchange in the week under consideration also went up by 279%, from just 14 deals to close the trading week at 53 deals. The AFEX Commodities Index, which is the ACI, also went up slightly over the week by 1.20% from 399.07 to close the trading week at 403.07. The AFEX Export Index, which comprises of cocoa and ginger, also went up slightly over the week by 1.06% from 146.57 to close the trading week at 148.13. The total volume of contracts traded on the exchange went up significantly in the week under consideration, with maize being the major protagonist, which went up from just 331 contracts to close the trading week at over 63,000 contracts. Cashew was also another commodity that traded up in volume in the week under consideration, from around 127 contracts to close the trading week at 725 contracts. With regards to price changes with commodities on the exchange, we only saw increases in the price of maize, which went up by 2.31%, gaining 447 naira in the contract value to close the trading week at 19,809 naira per contract. And also cocoa, which went up by 2.30%, gaining 2,000 naira in the contract value to close the trading week at 89,000 naira per contract. And lastly, but certainly not least, we have the fair trade exchange traded commodity, which remained unchanged at 14,008 naira per contract. And as we always say, if you want to know more about commodities, you can go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, whether that's spot contracts or fixed income products, you can download our app, which is available on Google and iOS.
All right, so Michael, what factors would you say are responsible for the performances recorded in the ACI and the AAI, respectively?
So if you look at the constituents of the ACI and the AEI, they are largely due to the fact that we saw significant price increases in their constituents, right? So if you look at the season till date return on investment for somebody who would have bought the ACI at the beginning of the season, and I think I have a few numbers here, the season till date number for the ACI, which comprises of maize, soybean, paddy rice, and sorghum, is 49.02%, and for the AEI is about 5.76%. With the ACI in particular, we've seen a long bullish movement in the price of the constituent commodities. So, for example, with maize has done between 26 to 30% this year alone. Soybean has done extremely well this year alone, doing as much as 60%. For paddy rice, we've seen a slight increase of just about 5.76% from season till date. And then with sorghum, we've seen a price increase of just about 12 to 13%. Give or take. So those are largely some of the factors that have driven the performance of the ACI. With the AEI, which is the AFEX Export Index, which comprises of cocoa and ginger, their performances have largely been due to what has happened in the ginger and cocoa market. And I would argue that maybe even the performance of the AEI was as high as 18%, I believe, in the month of March, but then it sort of dropped significantly because of the adjustment from main crop to mid crop, which sort of has a smaller bean count, accounting for the discounted price. Hence why you see the return of the AEI not being as large as that of the ACI. And it's also the case that the season for the export commodities tends to start slightly earlier than you would have for the commodities that you have in the ACI, which are essentially grains.
All right, Michael, it's planting season. What's the outlook for price movement?
So one of the dynamics that you would see, or some of the dynamics that you do see play out in the commodities market, is that there has been a shift of narrative, like you said. It is planting season, and a lot of the farmers are currently focused on cultivation of commodities as opposed to the normal trading activities that you would see in the market. So a lot of them are currently looking to buy inputs, looking to increase their productivity, and of course, by extension, increase their income. With regards to its effect on prices, so what we saw in the last month was significant consolidation in the market, where we saw no more than a 5% increase in the price of certain grains. So maize only did about 4%, soybean did only about 3%. If I'm to give an outlook for the month of June as regards what the effect of planting is going to be, I think we're gonna continue having a fair period of consolidation before prices increase significantly, only to adjust when harvest comes into full play.
So we've seen an undulating level of activity on the exchange in recent times, with some weeks having a lot of activity and very often followed by a week of low activity. Can you explain why that's happening on the exchange at this period?
So thank you very much. So I believe that's largely symptomatic of what is currently going on in the commodities market itself, because you have to imagine that the exchange is by and large a representation of what is going on in the commodities open market. And essentially what we are seeing is very little trading activity across the board for all the commodities covered by the exchange, and that spans from maize to soybean to paddy rice, sorghum, and maybe even some other export commodities. And so that's largely why you see that there are certain weeks where you see a high number of activity, a high volume of activities happening on the exchange, and there are certain weeks where you would see very low activity. But to really explain the situation, the most liquid commodity on the exchange, and by extension the open market, is maize. And maize tends to be the major driver of activities on the exchange. So it is the case that when you have a period, or when you have a week whereby you have significant maize activity, it tends to be reflected in the numbers that are reported on the exchange. And when you have weeks where you have low market activity for maize, it's also reflected in low activities generally on the exchange. And because of that, maize is by far the most traded commodity on the exchange, and even also on the open market.
All right, Michael, maybe I'm going to have to hold some maize, Anyway, following the Ramadan and Kaduna shutdown and the, insecurity issues around the country, how did it affect the commodity market prices?
So I think we've discussed a bit about what the effects of Ramadan on commodity prices. So I believe by and large Ramadan had a muted effect on commodities prices this season, in comparison to last season, where we saw a slight price hike in commodity prices for that same time period between April and May. But this season, we didn't particularly see that same dynamic play out. It was the case that the price hike that we expected in the month of May had already happened earlier in the months of December, January, and then maybe even some parts of February. So there wasn't really an incentive for people to hike prices during the month of Ramadan. And even at that, only a few commodities would have been affected, and that would be maybe paddy rice. With regards to the Kaduna crisis slash the labor issues that they had, I don't think it had any sort of significant effect on the commodities market, largely due to the fact that the crisis itself was short-lived, right? I don't think it lasted more than a week, and just because of that, we didn't really see that much effect on commodities prices rather. And it's also the case that the timing of those events also mattered, right? If they had happened when maybe during the harvest periods of October and November, maybe you would have argued that we would see a more significant effect on the commodities prices and maybe by extension the commodities market. But it was the case that they happened, both the Kaduna crisis and the insecurity issues that we are having in the country, they happened when there was very little trading activities going on in the commodities market, at least in comparison to the months of October and November. So the effects were not really felt. And it was also the case that even with the insecurity issues, the effects might have also affected logistics, with some logistics prices going higher. But even this year, that didn't happen. So it might have been the case that the only effect was that certain logistics companies who help transport commodities would be unwilling to go to certain locations because of the the attendant insecurity issues that are there. But even at that, like I said, because there wasn't that much trading activity going on in the market in the first place, it didn't really have that much of an effect.
So, Michael, I mean, when you come on the show, you also talk to interested investors, in AFEX. At a time like this, when inflation is a major discussion in the country, how much of a hedge is investing in your commodities market? How much does it give to investors?
So I think it is the case that we have established that there is a significant correlation between inflation and the commodities market. But even beyond that, for retail and maybe even institutional investors that are trying to design their portfolio, I think that the commodities market serves as a significant edge, but more so another opportunity for you to gain a very high return on your investment from a risk-adjusted perspective, right? So look at some of the numbers that I've thrown out today already. With maize doing 30%, with soybean doing 60%. I am not sure that any other asset class at the moment is doing that good a number. And what that means for you is that if you're constructing your portfolio and you have fixed income products and you have stock and you have equity products, it's also the case that it now becomes necessary for you to actually consider, adding alternative assets, to that particular portfolio, because it just makes so much sense, right? Because it's like you're playing in a space whereby, first of all, you can make significant impact by every dollar, every naira that you invest. Secondly, you can also make a significant, return on your investment in comparison to other asset classes. And thirdly, it's also the case that the commodities market in comparison to all those other asset classes, they're fairly predictable. I mean, I've talked time without number about how the supply and demand dynamics of the commodities market tends to play out, right? You tend to have significant supply at harvest. That supply tends to decrease as the time horizon lengthens, causing prices to rise significantly. Now, you may argue that it may not be the case that you can say with absolute certainty where prices are going to end or what prices are going to be at a particular point in time. But it is undoubtedly the case that in any given commodity season, prices are going to go up significantly. And if you have investment products, which we have created at AFEX Commodities Exchange, that allows retail investors and also institutional investors to partake in the commodities market without taking into account any of the attendant risk in the commodities market as with regards to holding the physical commodity itself, I think at this point it's just a no-brainer. If you're an investor right now, whether or not you're retail or institutional, and you don't have commodity investments, investments in your portfolio, I think you're doing yourself a big disfavor.
All right, Michael, I like those numbers, and I'll look into my portfolio after this. All right, Michael.
Do, laddie. No, you always say you will, but I never see any numbers.
That's a challenge.
I never see any numbers.
Michael, it's coming.
Laddie,
it's coming.
Put your money where your mouth is.
Don't worry, after the show, I'll do that. All right, Michael, thank you so much for the update. Michael Martin is a portfolio manager at AFEX Commodities. All right, we'll take a moment now. Business Morning returns shortly.